Hi guys, let's do a ES Futures review for the week of 10th January 2022. So let's do a recap first. I have posted a video on 24th of December about the ES Futures. The last video that was on the YouTube, and let's see what we had analyzed that time and where we are with reference to that particular analysis as of last week on Friday. So last week, when I put a video on 24th of December, the market was trading somewhere here, and I had mentioned that there could be a breakout of this level, and market might trade right above this level, one time framing higher, and might target 4,800 century level, which was almost Christmas as part of a Christmas rally um, move. And I also mentioned that once market reached to 4,800 level, then market might make a sort of balance of couple of days, and after that, market might trade below, breaking that balance low. And there has been a lot of single prints to the downside that will likely to be repaired at certain point of time. So it's very much happening what we have discussed on 24th of December. If anyone has missed watching that video, you guys can watch it, right? So there has been a large impulsive move to break this level, 4,700 level, which has been a resistance for longer time, and then market traded above, making one time framing higher, been in balance for a couple of days on FOMC, did a breakdown, and then started trading one time framing downward, and now repairing the single prints one by one. So let's precisely look at what happened last week in little bit more of detail, right? So market was one time framing higher, and you can see there has been a large impulsive move here, and this was P-shaped, means some shorts got started building the positions here, and then those shorts were uh, got covered with the large impulsive move to the higher side. And at this particular point of time, you see the move started becoming low, and market refused to trade further high with a very low, with a very small range. And then market was making very small range in these areas and started forming a new balance of couple of days. You see here, this was like 2 days balance, and then there has been a little bit of breach, and then again market came falling day, traded a little bit down, breaking this 3 days balance. But again, buyer will keep buying because they established the new levels, maybe 5,100, 200, which was not as part of my analysis at this point of time. The most prominent level that we have analyzed was 4,800 at as maximum, and uh, sorry, it was 4,832 if 4,800 would have been breached, but I will come back to that. So when market started forming a balance here, then what we were expecting that if this breakout happened, then the move could be to 4832, but that did not happen. So what happened that day? So market opened somewhere here, right above the balance, traded above, came down, and it was sort of forming a small initial balance. And then we had a initial balance slope breakdown that was sort of look above and fail of these 3 4 days balance range, right? So this was a balance range, look above and fail, and price started trading low. And then here we see the poor low forming, means weak buyers again building the position, they bought immediately and the price started trading higher. The following day again, market tried to trade above this, but could not go right above the value area high of the previous day. It could not even touch the balance high, and then start trading lower. And then on the FOMC day, we saw a very similar move to this particular move, where we had initial balance low breakdown and price started trading lower, right? And there has been a huge impulsive move to the downside, leaving so many single prints. You can see here, this was the single prints, and this was the poor low, right? So once this poor low breached, price started trading lower, and there has been a non-stop impulsive move uh, gone to the downside. Price stopped trading somewhere here. So there we had a spike rule, means spike balance remains this particular level, and this is a spike bottom. That means below this level price remains bearish, right? So the buyer job was to basically start trading right above this level and start bringing the price up, at least to take out some of these single prints. Mostly buyers are able to take out the single prints, if not today, tomorrow, maybe in a week or two. They will likely to take out all the single prints. This is what we have seen so far in the market, right? This is a very common move. It happens on the FOMC day when price makes a large impulsive move. Market goes down for some days, repair the weak structure, and then bounce back. Right. So that is what happens. Most common pattern that I've seen since last 1.5 years. Now coming back to the Friday move, this was the value where value was formed. P shape means shorts accumulated here, and you see buyers were not able to pass the value area high. That means the shorts who are here in this particular zone, they are not letting price go right above the value area high. If price would have traded right above 4,700, it could have moved easily to 4725 or 4733 area, and probably could have made another move to the downside. So price is trending very right now. It's trending lower. It's making one time framing down on daily time frame, and it is in a balance on it is in one time framing down on daily and weekly, but it is in balance within a week and in a month time frame. Are we done with the sell? I doubt we are done with the sell, because we do have this lot of structure that got to repair, that market has to repair that before it start making rally. But that does not mean that the buyer does not come and then they start making the move higher. So what we will have to do, we will have to look at these key levels which are putting in for the buyers and sellers. We got to see what buyers can do at these levels and what sellers can do. So in a nutshell, buyer have to ensure that they defend this poor low. This means the weak buyers. So sellers still might come down, repair this weak low, come down, and buyers might start popping in at 4650 and bring the price right above this level. This was the afternoon rally high, 4687.50. That means price attempted to go above this level twice but failed. But if somehow price can start trading right above this level, that means buyers are still in the game and they can push the price higher. Once price breaks 4700 level, then easily we can see 15 handles, 10 to 15 handles here, all the way to 4725 and 464, 4740, 4747, 4760, right? These are the single prints level that buyers likely want to take it back, where all the stops are there. These are selling, panic selling, right? So many sellers, they started hitting the offers, and the price, they brought the price down. Now what seller has to do, seller will have to ensure they continue this they continue the move to the downside, break this particular poor low. They do not give any chance to buyers to pick it up, and they start trading right below these single prints. So often there are cases, 80% of the time, price often gets bounced back from the single prints. As you can see, the on Thursday, this was the Thursday low, and this was the whole single print. So You look where price stopped and price started trading right above backup. Why this kind of move happens? Because these are the uh, trapped shorts at these locations. So this means this is where the shorts are trapped. Means old inventory of shorts are trapped. So what they do, they cover their shorts immediately to break even. And what they tend to do, they tend to take another short position at a better price. So they know that it is not a great price. They may get a better price to short, and they build another short position, and then that's why the price start moving up. And we can see there was another single print at this zone. So some shots got covered. Again, some shots here. We have some more single prints where we likely to see price getting bounced, or maybe these were the sellers, trap sellers. They cover their shorts. This is called responsive buying. And then some initiative buying happened where because of that price started trading low level. So will have to ensure that they keep making the impulsive move because they are in trend right now. So their job is to put the price back into this old balance zone and bring the price down all the way back to these single print levels where we might see small bounces happening from these single prints. As I mentioned, how it happened here. So 80% of the time it happens, not necessary to happen every time, but there are high odds of happening that because of the short rapid victory. And now this is next important level. If seller are able to break this level with a high volume, then we're likely to see these gap fills, which are there for I think since last month, December months, and then from there we observe what happens. I think we're likely to find a buyers here, so we might see a buyer sitting somewhere here or here at these levels to take the price higher. Now, one thing that we will have to keep in mind: price do not come straight to the downside or do not go straight to the upside. There are always moves makes up and down, right? But we will have to see whether market is trying to find a balance or trending lower. At this point of time, market is trending lower. Even we can see the Friday value was completely lower versus Thursday value. So it's a complete one time framing down. So market has not found a balance, lower balance at this point of time to confirm whether market is trying to find a short term balance. So market is still trending lower, and it can still trend lower, might get resistance here, and price might start trading here and might bounce back again to the downside. But buyers will have to come in defense if they want to take out these single prints and these single prints. From fundamental perspective, there are a few things that we need to keep in mind. I mean, of course, FOMC meeting was released on Tuesday or Wednesday, I believe. But that was not something that was of a very well. It was a shock in the market that market has to start selling off, right? It was not something that FOMC has already released the minutes in December, and they were very clear what they want to do. So it was there was nothing new what I found in the reading some of the news article. So I think it was more of a panic selling, and no one is interested to buy at these levels. Also, we know the fact that when market was making all these highs, lot there were many traders who were off during those Christmas time. So there was no large sellers. So there has been some sort of profit booking and the balance breakdown happened, right? So my job is not to focus on any news or something. I mean, of course, because if you follow the news, news will print next to your chart, so you will not have time to trade when the news start trading. You need to understand the level, the footprint of the market, the order flow, the interaction of buyers and sellers. So this when this sell-off happened, this was the highest sell-off I have ever seen in last 1.5 year, with 65K negative delta. The last one I've seen somewhere, I think here, when I think it was somewhere here, when 40K no, here, sorry, 40K negative delta was there, right, in this bar. So here we had a huge impulsive move to the downside, which led to 65K negative delta, means huge sell-off. So I've kept some of these arrows where seller or buyers might pop in for visual reference. I will have to see uh, what I see in the order flow in the tape or in the footprints when price react to these arrows or to these levels, and I trade based on those. Um, so that's what I have for the following week. It could be another great week, coming days. Um, let's see what happens. We got to trade what we see. Thank you and wish you all the best.